but we're going to wrap
money in the bank.
Rates are good. Pretty exciting.
You know why? Right.
Free money. You understand what I'm saying?
Hey, welcome back to the program. Thanks for staying with us. This is your Real Estate Chalk Talk, 612-627-8000, 612-627-8000. Kelvin Kaemingk, I have a question for you just before you get going.
Yeah, okay.
You know, we spent a lot of time in the first two couples talking about ratios, you know, stats on this, stats on that. We have a lot of things. You know, we have the contract ratios, listed sale ratios, you know, pending sale rate. All these ratios we're looking at gives us an indication of the direction and flow and the and the volume of the market. What things do you guys look at that's kind of give you the indicator of this is where the market's going, this is kind of where we are, this is where it came from, the trend lines and all that? What do you pay attention to?
Company-wide, they will, I think even for us in the branch level, probably the report we pull most is our credit reports.
Really?
Yep. How many people are pulling credit right now out of our branch?
Many.
Yeah, how many credit pulls?
Okay.
So I look at John, and John pulled, 10 credit reports this week. Okay, good. He's talking, and he's talking with people to the degree that we're pulling credit, evaluating where we're at, looking at things. And now we're doing what's kind of neat is now we also have just a soft pull option, so it doesn't affect people's credit and their phones don't blow up.
Okay.
Right? Because everybody should know that. Go to optoutprescreen.com. Optoutprescreen.com. You can pull your stuff off that so you don't get bombarded by all of the calls. But when you do a soft pull, you can still see what are the deaths. We can do everything, and now they're not getting bombarded with calls. And that's not us. It's the credit bureaus are now selling that information at a fever pitch because guess what? All revenue is down because business is down. So that's probably the first thing we look at is credit pulls, and then the next would be new applications. That's it. Because the other stuff will come, if we kind of know our ratios, we know pull through. I mean, our pull through is over 90%. If we pull credit trigger an application, we're going to close that file. Most likely we're going to close that file over 90% of the time. So we know that. So we look at that. Then we'll kind of look at forecasts a lot on interest rates, economy and interest rates, trying to get a flavor of where are we going economically, where are we going rate-wise. And that's been really, quite honestly, a disappointment this year because we read and we listen, right? You read and you listen. Everybody's wrong. Everybody's wrong. And the best of the best, Barry Habib leads the industry of knowledge base, and he's great. And we do a ton of stuff with him. We listen to him. But May 10 was our day, right? Why was I preaching May 10? Because he's preaching May 10.
Right.
I'm going to preach
the gurus are saying that.
Right. I'm going to preach the same messaging.
Yeah.
Way wrong. And they just said, "Yep, we were wrong on that one."
And it's funny how you can listen to different people, like our National Association Realtor economist, and you listen to him, and then you listen to the head economist for Realtor.com.
Yep.
You'll hear two different stories there.
I know. That's what's hard, right?
So it's like, okay, which one is giving you some rah-rah, and which one's telling you the truth?
Yep. And then you look at all the charts, right? And we just hit what was our moving average, our 200-day moving average, we just hit the bottom of. So, and nobody cares what that means. All it means is like we kind of hit that point where they feel like, okay, they didn't break through, because when you break through, it's like, where's that next stop line? There's not one. If they break through the one we're at right now, it's just like we don't know. So it stopped, it hit. The jobs report came out this morning. I'll just hit on that. Jobs report showed that there was an increase of 187,000 jobs in the month of July, which was below expectations of 200,000. Employment gains in May and June were revised shockingly lower by a combined 49,000. The unemployment rate declined slightly to 3.5%, which was below expectations of 3.6.
So that would mean that they've gotten their political juice of saying we've created all these jobs, and the real numbers come in, and of course
it gets corrected. Right,
it gets corrected down quietly, quietly revised down.
Yep.
And,
so the 187
rates would come down then because of that, right?
Well, this morning rates are this sounds weird. Our rates are rallying, which means rates are coming down. But you have to understand, when we talk about rates coming down, it's not like moving the rates. It means the cost of that rate is coming down. Because you literally, you talked this morning about the 7.875.
Yeah.
That's sadly kind of a true rate if you're not paying any discount, anything. It used to be back in the day, everybody paid like what you would hear people talk about, a 1% origination fee or a 1% discount, and that the discounts used to buy the rate down. There's 1% on everything right now. There's one file we're closing on Monday, Tuesday, investment property, St. Cloud investment property. The client is paying 2.5 points. We had to do a price exception for another 1.25 because there's just nowhere to go. You couldn't go higher in rate, right? Because they haven't opened up they call them tranches, Keith, where it's like, okay, we're here to now 7.999. Mm-hmm. Well, now they got to open that 8% tranche up.
Okay. And
they haven't done that yet. Okay. So you're not in the 8s. So now you're just like, well, if you want 7.99, then you have to pay 3.
Well, it's not
but that's an investment property.
Yeah.
And so, but they're like, okay, sounds good.
In the 90s, we were selling real estate, and we were paying many times 4, 5, 6, and 7 points on it.
Yeah, there's a cap. Yeah.
Is that you see something like that coming back?
No, not that high, because there's limits on how much people can pay.
Okay.
So that's why we have to do a price exception. So it's really a tough. They got to open up another tranche of rates is what they need to do so that we can get down there, because there's a limit on how much you can charge, and then people don't care.
Yeah, right.
So no, I don't think we'll get to that point. Okay. I mean, 2.5. I was surprised 2.5 went through.
What's the maximum that you can put then on a
about 2.5 to 3?
Really. So you'd really, as a consumer, you don't really have much option there. If you were concerned, I just want the low payment. I have the cash right now. Mm-hmm. I'm going to be in this house for as long. Yep. I just want to get me a rate I can live with. I don't want to have to deal with refinancing maybe in 3 years.
Yeah, in that case, we'd still do a 2 or a 3 year buy down, and we do it that way. It'd be a cheaper way for them to go.
And you just refinance at no cost anyhow, right?
Yep, we do. No lender fees, no appraisal fee.
So it's just
for
past
service. Clients. Yep.
For a service, just to come through.
Just to kind of flip it through and get going. And quite honestly, it's to keep that relationship, because when you have the relationship, you get the referral. You know that better than anybody, right?
Right.
Keep the relationship, we get the referral. So that's one thing that's going on. And what's going to drive rates? It's the same thing, economic data. Well, what was the big story this week? The U.S. government being downgraded. Not
Explain
great.
that. I don't think most people listening even know what you're talking about.
There's credit agencies that rank everything, right? And they rank the U.S. government, and they're saying, hey, the U.S. government isn't as secure as it once was.
So the U.S. bonds.
The bond. Yep, the bond isn't as secure. So that's going to... Well, that's why you saw the market sell off for 2 days in a row. And, when other countries are looking, where should we put our money?
The market, you're thinking the bond market.
Yep, bond market.
Okay,
and,
so
and the stock market as well. The stock market sold off 2 days in a row.
Well, what are they doing with the money? Selling it off. Aren't they buying? You can sell it. What you can do, buy a pile of cash on the table?
Cash.
Yeah.
Cash, because you know what? At the bank, you can get 4 to 5% now on your short-term money, right? So, anyway, they downgraded. I don't know. I don't think it's a political move, but it's Finch saying, hey, they're not as secure as they were. Still the best bet in the world, but just not as secure as it once was. And they said national debt, because no one talks about national debt, right? And no one talks about like budgeting, like actual true budgeting. If like one of these candidates should come out and have actually an economic plan that says, hey, when they do their budgets, they're assuming an increase. And what's the increases now? Because inflation's so high, that increase is so high.
Right.
How about zero base? Like if you got $10 last year, you get $10 this year. Mm-hmm. Or you got $10 last year, you get $9 this year. You got to just figure it out.
Right.
Right? Just like every other business, right? We have to figure it out. You have to figure it out, right? Highest rates in 23 years, mortgage interest rates. Lowest inventory historically. Bad combination for a guy like me and you, right? So what do we have to do? We have to look at my business. What changes? What things do I need to do in order to survive through this period of time? Because we know it's cyclical. We know it will all come around. But come on, but the government doesn't have to do that.
Plus, in our situation where you've got housing is a third of the economy,
right?
How long is it before this starts cycling through the rest of the economy?
Yep. I think it's going to start.
I think it's already happening.
Yeah. So anyway, we have a minute left here. So I just want to touch on where rates are at, so you know. I would say on 30-year fix, you got to be thinking without paying a discount, without paying anything down, you're mid-7s now.
Mm-hmm.
Pay a discount. We're going to flirt with high 6s, but to be honest, we're probably still 7 1/8, 7 1/4. Everybody will lie to you and say it's lower. It's not.
Mm-hmm.
But get the paperwork, send it to me. I'll do it. I mean, I had one this week where somebody was beating us, and I'm just like, hey, that's a great deal. It was a deal down in Texas. I'm just like, hey, go with it. Go with it,
And then they go with it, and it's like, well, they can't really do it.
There'll probably be something.
They'll be back.
Anyway, we'd love to have a conversation with you. 651-231-2500. Again, 651-231-2500. Love to have a conversation with you about your situation.
This is your Real Estate Chalk Talk. Give us check us out online, hittnergroup.com, HITTNER group.com, one of the oldest real estate websites on the planet, hittnergroup.com. We'll see you next week.
You've been listening to your Real Estate Chalk Talk with the Hittner Group, the leaders of the #1 Coldwell Banker Burnett Real Estate